Hey team, I wanted to throw together a quick video to show you how to use Sector Spider and another tool to kind of help you figure out which sectors you should be focusing your attention on when it comes to finding new stocks to trade. So focusing on the hottest sectors when trading will significantly enhance your chances of success for several reasons, and let's go ahead and talk about a few of them. So the first reason is momentum. So hot sectors often experience upward momentum, making it easier to identify profitable trading opportunities. Stocks within these sectors always tend to rise faster and harder than other ones, offering you potential for very quick gains. So as a trader, you want to constantly be aware of which sectors are on the way up and which sectors are on the way down, or the sectors that are currently being undervalued as well. We always want to be trading the upside momentum of a stock and selling when we see that downside momentum. So increased investor interest. So when a sector is performing well, it attracts more investors and media attention, which then drives the prices higher. So this collective interest creates a self-reinforcing cycle of rising prices. So you always hear this like on the news when they're talking about certain sectors or stocks are breaking out and everyone's trying to buy it. So even crap stocks that are in the right sector will stay flat when they should be going down, and they will go up when they should be going flat, just like the whole sector is going up. So when they go up, instead of going up a little bit, they go straight up. And this is when you can get those sweet 50% gains trading on a piece of crap stock that no one's ever heard about. So just think of it like Black Friday sale when people are fighting over TVs, or like when we had a toilet paper shortage and people were rushing out to get the toilet paper and all of a sudden there's no toilet paper left. A stock or commodity can be available all year long and no one wants it, but all of a sudden when the mob wants a TV or the mob wants that toilet paper, even the crappy brands of TVs and the crappy brands of toilet paper will cause a frenzy and people will buy them all up. Another reason is market sentiment. So hot sectors often reflect positive market sentiment. It indicates a broader economic trend, and when you're aware of this and you trade in these sectors, it allows you to align your strategies with the current market dynamics. This is kind of just like being in the trend. We'll talk more about that. But when semiconductors are a hot sector, you trade semi stocks, and when retail stores are hot, you trade retail store stocks. It doesn't matter what the sector is really, just when that sector becomes hot, you want to turn your attention to those stocks in that sector so you can catch these big moves. Another reason we trade hot sectors is that they are more volatile. So providing opportunities for short-term traders to capitalize on price swings. So this volatility can lead to higher rewards, albeit it also has an increased risk. So as a trader in the market, I always look forward to volatility, and I'm always looking to volatile sectors. As an investor, you of course want to stay away from volatility if you're a long-term investor, but I'm a trader, so I'm out here trying to look for ways to make 10% on my account in a month. Investors are out here looking to make 10% in a year, and long-term investors don't like drawdowns, so long-term investors try to avoid volatility. Like I said, I'm not an investor, I'm a trader. So I always want volatile stocks and volatile sectors. All right. Another reason is sector rotation. Something everyone needs to understand. So when you understand which sectors are currently in favor, it can help you anticipate market movements. Sectors often rotate based on economic conditions. So staying informed will give you a strategic edge in the market. Large financial institutions will rotate in and out of sectors throughout the seasons, and you should always be aware of when this is happening. You don't want to cause yourself panic when your stocks are going down. You might think that the whole market is going down, but it's really that you're just heavy in one sector, and that sector is going down. So understanding sector rotation is very important, part of keeping your sanity. Even the newest, hottest trends like AI or semi-chips or cell phones, they rotate in and out depending on the time of the year and what the rest of the market is doing. Another thing about being in the good sectors or the reasons are reduced risk. So by trading in strong sectors, you may mitigate some risks that are associated with individual stocks. Companies within a thriving sector are more resilient to market downturns. This means that the good companies in that sector rise faster when the rest of the market is collapsing. Your hot stock that you picked could be going sideways or even going up when everything else is going down. And when the overall market comes back around, your sector will be the one going up first. So as an example, here's a FinViz market temperature gauge, and you can see at the time of this picture, every sector is down except for consumer defensive, which is like grocery stores, soda companies, packaged food companies, Pepsi, Coke, stuff like that. But when the market comes back up, these companies in this sector will be the first to go up, and they usually go up the fastest because they withstood the downturn. Another reason is trend following. So trading in the hottest sectors allows you to follow the trends rather than fight them, and this is a fundamental principle in trading, one I see people get wrong all the time. Just remember that the trend is your friend. If you learn that now, you can save yourself thousands of dollars and having that lesson beat into you. So when oil prices are going up, you buy oil and gas stocks. When Bitcoin is going up, you start positioning yourself into Bitcoin-related companies. When retail starts surging around Christmas time, you start buying into companies in the retail sector. I personally trade all the sectors, and I never fight the market trend. I simply listen to what the market is telling me, and then I go with that. So kind of in summary, focusing on the hottest sectors can provide you with better opportunities, enhance your trading strategies, and kind of help you navigate the markets more effectively. So I want to give you a quick example of how you can identify these sectors and how I use a free website called Sector Spider, and I use TC2000 as my trading software to find the stocks in that sector that are setting up to break out before they actually do. Two things I want to show you first. One is FinViz. So this is that heat map I showed you earlier before. This is just taken from Friday, and this is Friday, October 11th, 2024. It was an up day in the market. You can see Nvidia broke even. Microsoft and Apple had small losers. Tesla had a down day after their recent Cyber Day, where they show off all their new technology, and the market was pretty much green for the most part. So when you want to get the Sector Spider, let me show you how. Literally just go into your favorite search engine, type in Sector Spider. Here we go. First link that comes up here is going to be Sector Spider. You can just go to Sector Tracker, and here you can see these are all the Sector Spider, which is Sector Spiders are just an ETF that tracks different sectors. On the one-day return, you can see that financials are doing best, XLF, and industrials are doing best. If we look at the 5-day market trend, financials, industrials, and technology are pulling the biggest. And then in the 1-month trend, you can see that energy has done best over the past month, followed up by communication services and then technology. So for our case, I would just be looking at the 1-day and 5-day trend because I want to know what's just getting popular now and where everything's going. So let me show you. I'll take you over here to my charting software I use, TC2000. On the left side of the screen, I have the 1-day candles, and on the right side of the screen, I use the 15-minute candles. Now, I built a list here of all the Sector Spider stocks. Every single day, I always take a quick look over here. Basically, the same thing as what we were just doing on the website. But if I sort by change here for the highest change, I can see that XLF and XLI, which is industrials and financials, have been having the best last couple days. So first thing I do on these sectors here is I go to the related items. Now these are all the stocks that make up this ETF. So I look at the top ones and say the top one is banks regional, asset management, banks global. So say here credit services. This is like a popular one. I can go here in TC2000, look for the industry info. I look for industry info of credit services. In this case, the reason I'm not going financial services is because it's mostly banks, and banks are low ADR stocks. They don't move a lot. I'm always looking for high value stocks that move. I'm going to add one filter to it, which is ADR. or one, this isn't a filter, ADR, average daily range. Basically, I'm looking for the stocks that move the most. Those are the ones I want to be trading. And from here, I'll just start clicking through these stocks sorted by ADR. I'm looking for 5 ADR or above. And I'm basically just looking for opportunities here where I see a stock that looks like it shows promise. Now, when I'm looking for promise, I'm looking for a good formation here. I'm looking for a wedge pattern. I'm looking for something to break out. I'm looking for greater than 1 million shares traded per day. This averages 27,000 shares, so I'm not going to look at that anymore. And I'm also looking for higher than $3 is usually, I don't like to trade pennies. I usually have better luck with stocks that get more attention. Upstart here is a good one. You can see it's built a nice base and had a breakout on Friday. And I usually just kind of go through it just like this. Lufax here, 1.9 million. OPFI trades about 200,000 shares a day. Okay. So I didn't really find anything that really piqued my interest, the credit card services. This payments could be something here. Oh, it's too low volume. Never mind. All right. And then say I want to look at the second one, which is industrials. I do the same thing. I go to industrials. I look at what makes up the industrial list. And then say I like this industrial distribution stocks. So here I go to sectors, industrial distribution. I'm going to sort a column by ADR. All these are above, or all these stocks are under 5 ADR, so I'm not going to trade anything under industrial distribution. Let's see what else we have here to trade. So I'll do this every day. When I'm looking for stocks that I want to add to my watch list, how about security and protection services? Let's go here, security and protection services. We'll sort this by ADR. All right. So now I'll scroll through here, and I'm looking on the left side of my screen, trying to find a stock that looks interesting to me. Logimark. Okay. Here's, nope, that's too low volume for Supercom. Okay. Here's the Evolve Technologies. Seems to have something going on here where it's having this descending triangle. I'll go ahead and set this alert here for a possible wedge breakout. And it's trading around 800,000 to 1 million shares a day. So I'll be looking for Evolve. Let's see what else here. Geo Group. You know what? This looks interesting. Oh, but it's low ADR. Okay. All right. So basically, this is kind of how I use TC2000 to kind of build a list of watch lists. And whenever a sector is breaking out, I'll go in and I'll try to find stocks like this that are not yet on people's radars. I'll try to be on them first. And when they do break out and everyone else is hearing about the stock that went from $5 to $15, I already knew about it and I got on it when it went from $5 to $5.50, and then I wrote it up to 15. So this is just an easy way to kind of track which sectors are going up and, of course, which sectors are going down. Here I see consumer discretion's going down. I see technology ETFs are going down as of this past week. So this can kind of give me a cue to like, all right, maybe I need to start rotating out of healthcare, set my stops tight on my technology stocks, and then start looking more towards things like financial ETFs, industrial ETFs, and sector utility ETFs like power companies and water companies, Hawaiian Electric, stuff like that. So guys, I hope that was helpful for you. I want to thank everyone for watching. I appreciate it. Please hit like and subscribe there as I'm trying to build up a bigger following on YouTube, and I'll release more videos kind of teaching you guys how to use tools like this. and how to become a successful swing trader. All right, thanks y'all. Have a good day.